Good morning, everyone, and welcome to the morning brief on today, Thursday, August 6th of 2020. Lots of stuff to go over this morning. Thank you so much for chiming in. If you're catching us in on replay, this is an investment forum where you can see at the top there, we invest with military precision. And again, it's a collaborative effort with a few folks. We're always looking for more. Reach out to me at steve@ototnow.com if you want a free trial, and we will get you all set up. And love to have you. So for our mission objectives today, we're going to grow our money, protect our money, and live off our money. Today's specific topic is going to be a list that Jim Cramer came up with last night. So this would fall under grow our money. These are the names that he thinks are specifically positioned to run higher if there's a vaccine. So it's a little bit premature to start talking vaccines, but if there is a vaccine, he says these are his 11 names he wants to put his capital behind. So that's pretty bold that he's come out and said some of these names, and they will surprise you. Trust me, they surprise me. And then the question of the day, once we get done with everything, we'll wrap up with the question of, should I have gold in my portfolio? You may think you know the answer, but there's always some what ifs, and it really does depend. Nobody has a right or wrong answer here. It's all really technique and how you are as an investor. All right, for our flow today, we're going to talk long, short, open, short, long. What that means to you, the viewer, is we're going to start long-term investing stuff for about 20 minutes. And then when we get to within 10 minutes of the market open, we are going to transition to some short-term day trading opportunities. If something sets up, I will call it. You can take it with paper money, real money, just follow along, whatever you choose to do. So that is the market review, headline review into the day trading we talked about. There's 6 names that we're going to talk about. Well, Disney we talked about yesterday, but I want to show you the chart after the big move, even though we just looked at it. And then the day trading we'll talk about. And then once we're done with that, we'll wrap up the chat. So if you're following along, what you don't see is the chat room where everybody does their collaborative inputs, as well as the Q&A window where people get to vote on questions that are out there. So have those both out and open if you're with me live. For contingencies, steveankerstar.now.com is where you can go to get your stuff resolved. We have staff on hand to handle your particular concerns. And the standard disclaimer always applies. This is a financial educational presentation, so you have to do your own due diligence before you act on anything that you hear today. With that, let's go ahead and do our market review. We're going to go up to the TD Ameritrade platform called ThinkPipes. Now, there was a headline out this morning that that Schwab bought TD Ameritrade several months back, so that merger is coming up. So if you are with TD Ameritrade, you will at some point in time be with Schwab. Now, my concern, since I use both personally as an investor, is which platform are they going to keep? And their answer this morning was definitively both. So nobody's going to be forced off their platform and have to learn something. It'll be a little bit of trauma while we do the repapering exercise. They're going to actually handle most of that. If you're already with Schwab, you have no concerns. All right, so let's look at this platform I'm talking about. You can see up top it says ThinkPipes. It's the advisor version of Thinkorswim, which I think is the best platform out there. So I was pretty thrilled that they're keeping it. From what you're looking at from left to right is a 1-year S&P 500 chart. The ticker for that is SPY. You see the big run up and then the drop off to the March 23rd lows, and then the V-shaped recovery, even though people are still trying to tell me that's a W or L or I don't know. They didn't do that well in kindergarten, evidently, because that's a V and the market keeps marching higher. When you look towards the end there, basically 5 green little candlesticks in a row. Remember, the green candlestick means that the market closed higher than it opened for that day. So, and you can see the uptrend lines. I'm sure we're kind of due for another uptrend line update depending on how today goes. We shall see. I do want to go over to the QQQ real quick. This is worth taking a look at. You know I'm heavy into tech, and those are generally my recommendations. Kind of a different story. That's what I call a V, maybe in bold, maybe in capital, like 40 font, right? That is how you made some money this year. So if your portfolio is up, you're welcome. And if you did it on your own, good job on picking up Amazon when it was like on sale for $1,500. Now it's up over 3,000, hit 3,200 yesterday. So you only get sales like this if you can stomach the stress, generally about once a decade. So hope you were paying attention. So that's the QQQ chart. We're going to go back to the SPY, and we're going to focus in on what's gone on in the last 5 trading days. And like I said, it's 5 green candlesticks. So a lot of optimism in the air. There's other themes out there. The election's coming up, getting a little bit of traction, but it's kind of too soon. Vice presidential pick is coming up. I think that will move the markets depending on who Mr. Biden chooses. Also, social unrest is still in the news. However, now that pro sports are open and people are kind of allowed to do whatever they think they should do to support whatever they support, kind of gone out of the news a little bit, which is nice that maybe we're healing in that category. And then, of course, the vaccine, there's new vaccine news every day, right? So it really does look, my assessment is we have a vaccine or close enough by the end of 2020. If not, in a couple months. You know, there's big contracts out there that have been dropping, and we talked about those yesterday. So as far as the move today in the pre-market, you saw it was kind of flat till it opened this morning. That dashed line is 4 a.m. Central. And then we kind of sold off there a little bit. And you're right, what happened right there is our first major headline of the day is the jobs number. You know, we get that on Thursdays. Payrolls yesterday. Today's the job number, jobless claims, and only 1.18 million applied for new unemployment this week, but we had 1.4 expected. So weird way, that terrible number is good news. So that's the way markets think anyway. So I thought today was going to finally be the red day that we kind of need. You know, you think of it as your lawn, you kind of need rain sometimes for it to stay healthy. Well, markets need that too. It's very unhealthy to go straight up. But today we could use a little bit of rain in the market, but I'm not sure we're going to get it, especially if we have the relief bill pass either today or tomorrow, and it looks like it might. And of course, you know, President Trump is threatening executive action if it doesn't move. Okay, we can go over to earnings. As far as earnings that were out last night, GoDaddy was probably the biggest name that again, it was on yesterday's earnings. They beat earnings, so they're back up close to, they're over $80 a share now after they had kind of sold off pretty hard there for a while. I had been trimming that position, not thinking they would come back, and then boom, straight higher. So I'm glad it was a trim and not an exit. But those are some of the names that I'm trimming to go into the safety mode for the election, which is 3 months from now, if you're not paying attention. That is it for earnings. Let me see, check my notes real quick. Plug Power looks like it's long, so maybe they beat earnings out there. We'll try to. They did, is what I'm getting here. So we know we like that name. Blink, also an electric vehicle battery name, also been on fire lately. So that should probably take Plug higher end there you see before market. So that is nice. We'll check that as soon as we go over into day trading stuff and kind of see how Plug's doing. But for now, we're going to transition down to CNBC, and we're going to go through the headline review, starting with around the world. You can see the futures there pretty much flat. They were green when I first woke up this morning, went red, steadily into the red, and went back to the green for the jobs number, and now kind of straddling. We'll see how today goes. All right, let's take a look at Asia. Pretty flat, nobody moving more than 1%. They've been kind of moving pretty significantly there. EU. Okay, mostly in the red, and over to the US. These are our numbers from yesterday. So again, a big move up in the Dow. So what we've seen, remember I showed you the QQQ, which is the NASDAQ chart. We've seen tech kind of outpacing the rest of the market. And then we've seen tech start to come in. And now the big names, the big industrial names will now some days outpace the market. So instead of things ever moving in unison, we're getting some weird action here. But if you look all the way to the right, guess what? VIX is going lower. Major election in 3 months and the VIX is at 23. What? So we shall see. We'll follow along. All right, let's click over to bonds. I didn't see much of a change in bonds there. So not a whole lot going on. Then we'll click over to oil. Oil up steady there above 42. We like that number. Nat gas has kind of been on fire too. If you watch like UNG, we were in UGAS for a little while. That's kind of how that works. All right, over into gold. We are going to talk about some gold today. All right, so gold is up at 2066. Record peak on gloomy outlook bolsters the appeal of gold. That's our topic of the day, so I won't get into it too much there. But if you look at Silver, you know, up 4.5%. If gold's too high for you, hop in on silver and you may like what you see. And also I shamed platinum yesterday, and platinum was up pretty decent and also moving up today. So you can, we'll talk more about that later. All right, let's go to headline review. And again, there's the futures, and we'll scroll down just a little bit and see that jobless claim number. So there you go, 1.186, lowest level of the pandemic. So again, you saw that how it acted this morning for the markets. All right, let's see. You know, tech's under review right now for antitrust issues. We already talked on the right there. President Trump is threatening executive action. I don't think that's a good thing. I'm for the markets is getting into executive action mode, especially this close to an election, which he's already saying it may take months if we do the mail-in balloting. So there's a lot of things that could really upset the market pretty hard coming out of the current president's mouth, you know, 3 months into an election. So, you know, I'm moving to safety. You may not like that because it's been straight up and I've been moving to safety for a while. That's fine. We're not going to be greedy here and try to grab alpha when we're going, you know, picking up pennies in front of the steamroller. So we're not doing that. All right. Down there, Bank of America, they they downgraded Apple yesterday. And then the joke from Predator was that Apple should downgrade Bank of America. But, you know, Warren Buffett's moving into the bank names, so we shall see. So generator maker, Generac, I generally stay with Home Depot and Lowe's for the hurricane season of seeing a move higher. Okay, Teladoc, we know about the merger from yesterday. Etsy crushed earnings either last night or this morning, so a lot more people taken to the interwebs to be able to sell their goods. And again, that's a homemade crafting good website. GoDaddy, we already talked about. All right. The BOE governor there, the market is repricing several things higher, but it is certainly certain parts of the economy are being left for dead. You're seeing retailers go under. You are seeing restaurants go under. If you get out and about at all, you're seeing some vacant spaces out and about. So, you know, kind of cater that with, you know, it's not the entire economy that's screaming higher, but certainly the work from home environment names are. Okay, let's scroll down a little bit further here. Perfect. TikTok, Broncos, we've talked about all that stuff. Continue, let's go down a little bit more. There we go. There's one I'm looking for, I'm trying to find it. Let's see, keep going. Keep going. I can't remember the exact headline I wanted. It's down here somewhere. Oh, there it is. Perfect. So Nikola, bottom right, check that out. So this stock IPO'd through the Special Purpose Acquisition Company. Their chairman who founded the company is brilliant and he won't shut up and he's silver-tongued and everybody believes him. This stock IPO'd and basically shot to over $100. He, during that time, while he's talking about how he's going to be larger in Tesla and a bigger game changer than Tesla because he shares the name Nikola with the actual Nikola Tesla. But guess what? Look at that. In the entire quarter, last month, last quarter, 36,000 in revenue. Yeah, that's like working from your house type numbers, right? Yeah, what? Can you believe that? So it's all hype. It is literally hype and house of cards. I would not be in on this. I would get out of it now and run away. Now, there are people that are upgrading it saying, hey, once they hit the ground running, you will wish you were in this name at 30 or whatever it's at today when it's at 1,500 like Tesla, and maybe they're right, but I'm out of it for now. All right, that's what I wanted to see. Let's go to the FinViz. We're going to take a look at Disney again. And the reason we're looking at Disney is just from that move yesterday was pretty amazing. So the move here, so we talked about yesterday and Predator brought this up, kind of a narrowing channel trade. So when you see a stock narrow in from the trend lines up and down, what you do see out of that is generally a big pop or a big descent. So I think even though they missed earnings, what we have there are a situation to where if they would have missed it even worse, they would have gone red 10%. So a lot of times you can use advanced options around things that you know are going to move, straddles, strangles, collars, that sort of thing. Okay, so what we're going to look at next is we're going to transition over to Jim Cramer's board. He had what last night on Mad Money. I did not catch the episode, but I saw the headline this morning. He has 11 names at what he calls his go list. All right, well, where are they going to go? They haven't really gone up yet. So I guess that's the idea of the here. That's me trying to make a joke. But the idea here is that if there's a vaccine in 2020, these are the 11 names you want to be in. These are not names I'm normally in. I don't consider them best of breed. I consider them really industrial types. I'm generally not in them. But we'll go through them anyway because he's a very smart individual and he makes a lot of correct calls. So when you look off over to the right here, you've got Disney in the upper left. We've already looked at that chart and we had the big move yesterday off of earnings. So we don't really need to talk about Disney more than, obviously they have ESPN and they have theme parks. So vaccines means more people, maybe not full capacity, I get that, but more and more people into those sorts of things, buying $7 hot dogs and $5 Cokes and $20 beers. You know the drill. All right, over to Nike. Nike has been kind of left for dead. It did recover. There's a lot of issues with sponsorships now and who's saying what, and the big sponsors are out there, of which Nike is one, is trying to navigate that with offending the least people, I guess you could say. But they certainly have a lot more room to run higher if they were to get back to the Nike of old. Middle left there is MasterCard, MA, MasterCard and Visa. I call these the old payment processors. They can't hold a candle to Square that owns Venmo, PayPal. Those are much better names to be in my opinion, because they are higher tech, high margin. But his point, we all have it in our wallet, and I'm guilty too. I have stuff that says MasterCard in my wallet, and I use it every day pretty much. So that's his point, is that this, once we get out and the economy kind of explodes and we go to restaurants and sporting events, that MasterCard will go higher with it. 3M, you can see that's the industrial company making all their products that are out there. Very used to be a cutting edge innovator. They still kind of are, but they're left for dead right now. So working through a lot of issues, but if the economy would boom, then you could see them starting to go higher. Lower left is a Ralph Lauren. This is a name we talked about the other day, and they missed earnings, and you can see the drop there. If we can zoom in on that just a touch. So you see the drop, and then you see green candlesticks. So what does that mean? It went all the way down to about 63 or so, kind of gapped down overnight off of those earnings. And then we were going to take that short, or we did take it short. I can't remember. Perfect. And from there, it's basically bounced up twice now. It's going to bounce probably higher today. So that is a name we will look at for a long. This is Ralph Lauren. I'm not excited about it, but that would be a headline that could take things higher, the fact that Cramer's talking about. And the last one is PVH. I was going to put a CRMR in there for the ETF that should exist, that whatever Cramer talks about on Mad Money, how does it do the next day? There have been PhD level studies on this, several, and it's basically inconclusive. There is no pattern of trading that says Jim Cramer talks about it at 6 p.m. Eastern, and then at 9:30 p.m. or a.m. Eastern the next day, there's a move you can count on. There just isn't anything to go off of there. But obviously PVH could go a lot higher here. That's not a name I would touch either. So those are 6 of the 11. Let me cover the other 5 real quick. I'm not going to go into detail, but just so you hear the names: Emerson Electric. So again, industrial. PPG Industries. DuPont is a pretty popular name. It's kind of left for dead. Union Pacific. Jim Cramer's in a pandemic is recommending a railroad. That's the kind of genius that you just, if he's right, that's going to be a pretty impressive call. And then Nucor as well. So those are the other names out there. All right, so here we are 10 minutes out to the open. We're going to transition from our long names into the short names. And what you're going to start seeing in the chat from now on, so thank you for putting that in there, is, and we're going to start putting in long names for, we have plug and KBH. I have the reasons down here. Again, this is some pre-market study that was done by my staff. And, we'll have a couple of short names. So that's what we'll look at first. This is your opportunity when you have things that you want to look at as you're setting up your screens for trading. That's when you want to throw a name out there. I promise you, I'll give you my 2 cents prior to the market open. But barring no names popping in from you guys, I will cover the ones we came up with. The first being plug, which we've already talked about a little bit. If you look on the screen there on the left, you're seeing that chart. We kind of zoom in and out on that depending on what's really of interest. But it closed yesterday at 9:30. It's gapped up $1. So what's that? 10%? 9.54%. You can see that from the tab on the right-hand side there. You can see it previously was up above 10. It didn't really stick there. But with how Blink has been crushing some contracts lately, and they're in the same industry. They don't do the same thing. But I could see plug running higher here as well. So it does say over there, it says reports a quarterly loss of 3 cents per share. So when generally you see that, it's the, you know what, we're going to be profitable next quarter because they got really pretty close to being profitable. So the next line down, it says they beat by 7 cents. So doing the math for you, that means that they were supposed to lose 10 cents a share. They only lost 3. That means profitability in the next quarter, and that gets everybody excited. So I like that name long, and that'll be one of our 3 we will follow at the open. All right, let's look at KBH. This is KB Homes. Home builders have kind of been on fire. All I see is a gapping headline, 34 up to 35.5. Not a whole lot. It's kind of in some congestion there. So maybe is the best I could say. Probably not going to get a look from me. We talked about, yep, we can go FSLY. This is Fastly. I don't know what they do, but they certainly meet our criteria. Plenty of volume. It was at 108, gapping down to 88. Let's see if we pull the 17%. So it's even more than our 10% criteria, but it's selling off pretty hard. So look at the fall from 116 all the way down to 92, and then down at it says 88 for the bid ask. So it's continuing to fall right now. I do like that short, even though it's already been hit pretty hard, but I don't know who's buying it here. All right, let's look at the one more, Ralph Lauren RL. We said we would look at that. This would be a long, not in love with it by any means, but since I did get called out by Cramer, we could see a move higher, especially at the open. 68 to 69.20, and it's coming up from 64. We'll take a look at that long. That'll be a maybe. This is the best I can give that. All right, off of our tabs, we don't touch gold or silver, even though they are in play. That would be if you really wanted the super safe trade of the day, you buy silver, you hold it for half an hour and get out of it, and maybe, you make a little. I don't see it coming back down. There's our plug power at 10%. There's a health company down there at 15%. I'm not familiar, so we will move on. CCL, let's take a look at that. Carnival Cruise Line. All right, CCL short. That is in our wheelhouse of 5 to 10% off. Let's see what we can dig out of this. Files for stock shelf size not disclosed. So they're going to have an equity offering. So we don't price 99 million shares at 1402. All right, and it's sitting at, well, it closed at 1402 is what I'm getting out of that. So not going to touch it based off of that headline. You look at that downtrend though, and if you were to take it one way or the other, you would definitely go short. We'll check back on it today. All right, let's look at the next tab. We are 6 minutes out from the open. All right, Denali Therapeutics, we got to give that a look. Well, it's 30%, so we don't need to give that a look. GoDaddy up 10%. I don't really see it screaming higher, so we will leave that one alone. Teladoc could go higher. That would be a continuation. So let's we'll check Teladoc here real quick. TDOC long. All right. You know about the deal yesterday, they got kind of beat up for it, so it would say it was overreacting. I don't think that's necessarily the case. It's overreacting, so I'm not going to take a look at it. Okay, Let's look at the next tab for some short names. There's our FSLY short. I do like that. It's already moved a lot, but it's going to be one of the top 3 we'll be watching at the open. Wix.com, that's the website thing. Let's take a look at the headline real quick. 5 minutes to the open. Closed at 309, down to 259. That's a huge gap. Israel's Wix missed by 51 cents, even though they beat on revenues. So that means they're spending. Maybe they're growing. Have some non-GAAP numbers up there. Boy, the market's not liking that, down at 16%. We'll put it under our short for things to watch. It's moved a little too much, in my opinion. All right, yep, we can go to the long names again. There's Teladoc. We already looked at Teladoc, right? For long we did. Okay. I'm going to pass on Bausch Health and don't see anything else I want to pull up and look at it. Let's take a look at the last tab. 181%. All right. Okay, looking down, what do we have with volume in our range? Is Infinera. Let's click on Infinera, INFN. This again would be a long. New CEO. People are liking that. It's gapped up from 780 to 840. That's pretty good luck. There's Plug Power with the same numbers. I think Plug's still the best play probably out there. And that's it. All right, 3 minutes to the open. We're going to take the screen back over to our main displays here, and we're going to get them set up, and then I will intro into the open. All right. Let's see, on the left-hand screen there, let's put Plug. Again, that is a long, based off of an earnings beat. Kind of run up a lot. We shall see. We'll keep an eye on it, see if we can get an entry. Then let's look at FSLY in the middle short. And then we'll take a look at Wix short. It's certainly moving. We will keep an eye on it. They already had their conference call this morning. It's kind of recovered from the conference call, so let's not do that. Let's look at CCL short. See what kind of action we have going in. That's bouncing 2 off of volume. Go out to like a 20-day or 15-day. Just kind of see the path of this. Trending down. That'd be tough to take short, especially with vaccine stuff. So we'll go back long again. Let's look at RL. That'll be fun. Probably not taking a position here due to the low volume, but we'll watch RL open and see if it catches kind of a Cramer wave since he did it there. All right. So again, we have what's called long, short, long across the board is what you're looking for. And for what I would want to see out of Plug for it going long is that anywhere, if it sticks around 10 for the first minute or two, we can take anywhere between that 10 and 20 congestion. We'd prefer it to come in first, meaning some profit taking. So that's really what I would want for it to do is come down to almost 10 and then go higher. So if we can take it right at 10, that'd be good news. I generally wait a little bit and take it when it's going north, but I think 10 would be a good entry point. For FSLY, since it sold off so much, I think there will be, I do intend for it to back up and maybe get up around that 91 frame so we can turn around and roll it short. And then RL, we'll have to see, we'll have to wait and see for the volume to come in. So, all right, so we have 40 seconds here to the open. For today's plays of the day, you're going to see 4 screens up there in ThinkPipes. On the far left, we have the SPY, so we can see the overall market trend of it as it opens. And then I'll refer to the other 3 panels as left, middle, and right. On the left panel, we have Plug, which we are taking short. We'll look for an entry there. That is based off of earnings. And then in the middle, we have FSLY, which is a continuation, basically, of it continuing down from selling off. And on the right side, we have Ralph Lauren, which Cramer mentioned it, and it's going long. So with that, you heard the bell. Let's take a look. I'm looking at Plug first. I would really prefer that to come in, and then we'll glance at the others. So if you're not familiar with what you're looking at, again, those are dojis. Those are the big lines that are going up as the candlestick kind of tracks out. I do want to see that start to come in. I do like FSLY kind of starting to sell off a little bit here. So we're going to transition out of plug. We'll keep an eye on it, but I'm not getting an entry there. It might have left town without us. Okay, so we're going to look at FSLY. It's backing up on us, which is good. So this is that short covering, if you will, of the market going higher. And again, when we take this, we'll want to take this short. So we want all that big volume in of all the big players getting out of the name so we can turn around and reshort it. Okay, there you're starting to see that doji sticking up. So let's take it on the way back down when it hits 90. I want to wait for it all the way down to hit 90 right now. And once we hit that, then that will be our entry with a $2 stop is what I'm looking for. If we get a couple more candlesticks where it's hanging out in the range it's in now, then we will tighten that up. But right now it's flopping around too much. We'll have to use a $2 stop. So you plan, of course, you think that the stop, you have to plan your shares accordingly there. All right, and again, waiting for it to hit 90 for us to enter this trade, which means that the selling is actually for real. Okay, we're going to use 90.40 as the entry point. If it falls down to 90.40, then just go ahead and draw the line. That means we're taking it. You want to have your order in and ready. And then we'll use the $1.50 stop. Okay, I think it hit it. So we're in at 90.40. $1.60 takes us up to $1.50 takes us up to 91.90 is where our upper stop. Again, that's 1R. You always put your negative stop in first. So in case it hits that, then we'll be stopped out, and then we're down 1R unit. Okay, so there, once we have that in, and then for 3 Rs, we need basically 150 times 3, which quick math in the morning is 450. So basically down to the bottom of the chart. You can eyeball from where our staff has drawn the lines of what that looks like to the downside. Okay, blink is just too strong to try to get in a delayed entry. It would have to come all the way down to 10 before we would actually be able to enter that. As we're watching our trade in the middle, again, it's short. We'll put a little arrow there to kind of show you that that's the way we're taking it, and I'm out, so it doesn't matter. Busted on that trade for FSLY, so down 1R. All right, again, don't like plug on the left, so we'll not going in that. No entry there, so again, no money lost. You can turn around and take FSLY short again, but that's not what we do here, so you would have to do that on your own. The market is kind of going higher, so when we look at, it's all just barely in the red across the board, but some nice green bars there. On the right, let's see what kind of move we just had. Not a lot of volume, 20 plus, about 23,000 since it opened. I don't think Ralph Lauren's a strong enough name to be able to take that long. So we shall see. I do like the entry better there at 68.05 than where it was. But we will keep an eye on it. Okay, I'm tired of looking at FSLY, so we're going to surf around a little bit and check out some other names. KBH, this was a long based off of earnings. So that's kind of a better entry that I'm looking for. It opens up at 35.31, and then it dojis all the way down to 34 below, 34.80. Obviously, you can't take it there. You were throwing a dart if you take it there. But when it comes back above 35.10, 35.15, and kind of shows some strength going higher, anywhere in there you could take that trade, anywhere between 35.10 and 35.30. 35.30, now you're probably at that last point where you kind of have to tell yourself as a trader, crap, I missed it, find something else, or you know what, go about your day and find something tomorrow. We don't have to trade every day, that is for sure. All right, so let's look at, we've got Ralph Lauren's looking interesting. It's down back at the low of the day, still pretty low volume. Nope, can't do it. Can't call a trade there, just not strong enough. Let's go T-Doc in the middle. This is Teledoc. It was a continuation off the merger from yesterday. This would be a long. You can see the big gap up. Yeah, that 219 to 215, that's a $4 candlestick up and then down. That's the danger Will Robinson. You don't need to mess with Teledoc because it's just moving too much for you. And then I put in INFN long. I'm blanking on what that name was. Wow, that was there's your play of the day. So it opens up at 840, drops down to 834. You could realistically, if you were taking this long, probably 845. When it goes above that, you could get in, and then 10 to 15 cent stop. That's 3 hours all day, probably more like 5 hours. And this is one that is showing so much strength. If you had 500 shares, I would take 400 off and just let the other 100 run. So no worries, we don't need to look at that anymore. Let's look at CCL short and see what happened with that. Again, this was stock offering coming out, if I remember right, for CCL. It's backing up, so that would not have worked. All right, and then Wix short. Wix, that was definitely not short. So 266, as it opens, it's already moved up $23 a share. That's kind of crazy. All right, transition over to the left. Yeah, look at that market. So that's not quite the move that it looks like there. It's pretty well focused in. But that up at the top, it's still in the red. So you're really not talking a huge move, even though it looks like it on the chart. All right, let's transition over to some longer term names. So we'll pull up charts and take a look around. All right. Let's see, GoDaddy up 11%. That's nice. We like that. The investable thesis is that domain names are like real estate. There's only so many of them. I don't buy that at all. I like GoDaddy, and I like it because they charge you a lot for what they do, to be honest. And both my websites are through GoDaddy. I pay them just like everybody else does. But yeah, they make a lot of money for the work from home environment. Everybody's throwing up a website, doing their freelance stuff. Maybe you got a website that your Etsy page turns over to. So yeah, good on them, if you will, for moving up. All right, ATVI. Nintendo last night, remember that's a foreign name, crushed some earnings. We didn't talk about it this morning already. But yeah, Nintendo is talking about their sales being through the roof now that everybody is work from home / GFH, game from home. So the social interactions for those that are 30 and below that are into the gaming scene, yeah, throw on a headset, meet up with all your buddies. You can see them every day. That can fill a social need out there. So I think that is a tremendous investable thesis, as well as Christmas is coming up, as well as PlayStation 5 is coming out. So there's a lot of positive things in the tech world there. So good for Activision, on its way higher. All right, you see Blink bouncing around in yellow there, not getting the kind of move that Plug's getting today. We thought maybe that would be a little bit sympathetic. Workhorse is another name that we always talk about. Take-Two is another gaming name, TTWO. DraftKings are moving up a little bit today. All right, a lot of things are flat. Let's switch over to seeing what's moving in the short realm. Okay, Canopy growth, first of all, 2.5%. That's not a big move down. So we really kind of have a day to where in the big picture, not a whole lot of things are moving tremendously. But there's stuff in motion. Micron's on the way down. Prudential, MJ is marijuana. So Alibaba. Some of the Chinese names are starting to get a little nervous again as Trump picks up the rhetoric that he's talked about. So that's kind of what I have for there. Let's close out the chat. Not a whole lot to talk about, but again, you're going to start seeing those names there. And yeah, that's what we will have from now on. We'll also put, if we have the reason for it, we'll put that for you. E is earnings, H is headline, that sort of thing. You can see. So all right, with that, I'm going to switch into a question of the day. So you're going to look at how can I invest in gold? So today's question of the day is, how can I invest in gold? Well, there's basically 3 schools of thought that are out there, and none of them are right. None of them are wrong. It's just largely personal preference. So I will cover all 3 quickly. The first one is never hold gold. I'm in that camp. I can't say never. Almost never hold gold. So that's the folks that consider it a commodity. There's the always hold gold, which is number 2, and we'll talk about that in depth on why you would always want to hold gold. And then the third one is somewhere in the middle, that you can trade in and out of gold, just like any other position, just like you would a stock. You know that my investment philosophy is largely buy and hold, hold for a reason, which I called the investable thesis. And when we sell, it's because the investment thesis changes. So let's talk about them in order. So there's first the never hold gold camp. And again, I can't say never ever. I prefer silver. So if I hold a precious metal, I like the lower price point, and I like that it's only 50% of its highs, not bouncing off of new highs every day. But folks that don't hold gold are Warren Buffett, Steve Ankerstar, and several others out there that view the stock market for exactly what it is. And that is companies that are providing products or services at a margin, and that margin allows them to make a profit, and then they pass that profit on to their shareholders. So if that's why you're investing in the market, which you've heard me talk about over and over, then obviously gold is not a company. It doesn't have a product or service. It doesn't really have anything. It just is. So if you're going to invest in commodities, and there's many of you could do fine art, vehicles, oil futures, there's things that are just stuff, and there's no particular best or breed or worst of breed. It just is. You're dealing with what you've heard me talk about is the greater fool theory, meaning, and that's kind of derogatory, but when you buy a commodity, you are looking for somebody else to buy it from you eventually. And you obviously get to determine that, or if you're going to hold it a long time, you're just going to basically hold it through your life. And then when it passes on to your heirs, they can make a move with it or not. So that's commodity investing. We don't really do that. So the second one is the always gold folks. So when you think of why you would want to have it, the number one reason I say is an inflation hedge. So if we get into hyperinflation, and right now, we're coming off all the stimulus, that is, the trillions of dollars being dumped into the market. And if that's the case, then you would think that inflation is a natural byproduct of that. That did not happen in 2007 to 2009. So the way that things are being handled right now, it doesn't really look like it's setting up for a hyperinflation phase where you would definitely want to have gold. But it's actually, the Fed's actually talking about, what can we do to increase inflation to their 2% mark. So when you think of a hedge, there's several hedges out there. Gold is one of them. If you are an always hold gold, pick an allocation, say 10%, and just hold that. Obviously, every year you're going to have to look and see how everything did and readjust that position. You might have to buy a little or sell a little, or if you never sell, just wait for your portfolio to increase in value and then you buy more. But that's what you're really doing with investing in gold. And there's really two ways. Well, there's a million ways, but there's two popular ways. And that's actually using like an ETF, which is a GLD. Out there, you can use that to hold gold, where you're holding it electronically, if you will. You can also buy coins. There's not a whole lot of gold coins out there, but there are silver coins. So people that are looking at, do I want to take possession of the asset and bring it into your home? There's obviously, if you're holding gold and a lot of it, that brings its own concerns with it, that you have so much value in your home, in addition to your house itself and your bodies. So you should probably keep it elsewhere. And there are companies out there that do store precious metals for individuals, and they make you pay through the nose to be able to do that. However, if you have coins like silver coins, those you can buy a couple hundred of them. You are generally, when you buy coins, you're going to die with them, right? And I'm not being crass by saying that, but I'm saying you're buying it so it can basically increase in value over your lifetime, and then somebody else will sell it. You have to pay about a 20% premium to get into a coin version versus the ingot version. So it's going to take you several years just to get back to even for what you paid for it before, that the spot price is that higher. And then you kind of wait for it. So you can have that stuff. If you aren't always have it kind of person, then just pick a certain amount and stick with it. Okay. The third one is the third school of thought out there for should you have gold in your portfolio is as a trading position. So we are going into an election, and you would think that this is going to be a contentious election. They seem to be getting more contentious over time. However, the market has not agreed with you. The market is continuing to scream higher. I don't know how long that will last. I've already started to go to safety with investments, but when you are managing your portfolio and going to safety with investments, generally as a trader, that's when you would move into precious metals as a hedge. So that's what I call a tactical hedge, where if you have it all the time, that's a strategic hedge because you just have 10% of your net worth in precious metals or whatever your percentage is. If it's tactical, that means you're moving in and out of it. So generally precious metals move opposite the market. Well, they're not doing that right now. The market is going higher and the precious metals are going higher. And it didn't do it in COVID-19 when basically people were logging on or making a phone call to their advisor and saying, sell it all. When you have the sell it all mentality out there, that's when you run into situations where they move together. The market sells off and the precious metals sell off. Going into the election, I don't think there's any guarantee that if the market sells off, that precious metals go higher. I think it may be the really big run to safety instead of just a hedge. It might be a full run to safety, which means go to cash. Obviously, if you're doing the, if you're trading gold as a position, you have to be right twice, which is the timer's paradox, right? You have to be correct when you bought it and then correct again when you sold it. So that's why most folks say don't do that. I try to trade at a minimum, keep that down to a minimum just because it's really tough. It really is. And then there are other hedges out there. You don't have to use precious metals to hedge. You can, and dare I say it, Bitcoin. I don't own it, but there are enough people that do that's getting legitimized, and that would be a hedge against inflation, also a hedge against the US government system. Again, not something I would recommend now, at least, maybe in the future, but that is also a hedge against a market that's falling. You can also use bonds, which I do use quite regularly as my hedge for the portfolio. You can also go straight to cash, which again is more of an all-in, all-out kind of mentality, which I don't like. Or you can use covered calls, and many of you have covered calls in your portfolio. So thank you so much. That's all we have for today's show. Please reach out through ototnow.com with any questions or comments. Thanks again for joining me, and here's to you fighting the good fight every day to be on time, on target with your financial goals.